All right, hello traders. Welcome to today's end of day commentary. And well, I'm Orlando for Snipe the Trade. And today we're going to take a look at, well, first of all, let's take a look at this week's trades on the GBP Japanese yen. We had a great week on the GBP yen here at Snipe the Trade, where we made 470, 480 pips, if I'm not mistaken. We traded the bounce of this area of support are around the 153.62 level. And of course, we need always confirmation for our trades. This is why we have such a big or such a such a big win rate. So we made 235 pips, 230 pips, I'm sorry, on this long position. You remember the fat finger here, which was not a rejection, so we did not get trapped on this bear trap. And what we did is we shorted once we got a clear rejection of this zone. And we made 242 pips on the downside, netting 472 pips. And if you're trading one lot, that's $4,700. So that's a lot of money for 1 week's worth with only two trades. And well, if you want to trade like us, just join us at snipertrade.com and subscribe to our trade alerts services. Now let's go and take a look at gold. Gold has been on a tear, guys, and well, let's look at also the dollar index, because you know that they are immensely correlated one and another. So what we're going to do, let me just find the DX. Where is it? Where is it? Where is it? US index. Here it is. So, well, as you can see with non-farm payrolls disappointing the market, uh, the dollar sold off and then it had chopped down again until today that we had a relief rally, but you can see that still sellers have a lot of pressure on this currency. So what we're going to do, we're going to go here back on the gold chart, and as you can see, we are inversely correlated with the dollar. So what's going on here, guys? Well, as you can see, we are in almost erasing all of the losses from this move to the downside. But if we zoom in on the 4-hour chart, well, you can see that we were in a very strong bull market until we arrived to this zone of resistance between the 1272s and the 1279 level. Okay, now we faked out of it a couple of times, and but buyers couldn't keep this zone up, and we started to move down until entry pips hit, and then a disappointing news on the US dollar, on the US currency, made for a nice bullish move on gold. Now, if we go back again and see right here, we tested this area. Now, this is a very important zone, guys. And this is why we at Sniper Trade don't take um, well, we actually didn't take this short opportunity here because one, it wasn't confirmed. Two, the strong to the the move to the upside was so strong, and three, the dollar has been in a very bearish pressure, not only because of non-farm payrolls, but because of the dovishness of the Fed about hiking the rate hike. I'm sorry, about hiking the interest rate the next meeting. So all of this makes for a very weak dollar, and we are not going to short gold on a weak dollar. Okay, we want to buy it. And as you can see, I had an alert here because we were looking actually for a retracement to this zone for a long opportunity. We didn't take it, so we are not chasing the market at this time, but it would be have been a very nice move from these highs, preferably to this area of support, and there we would have gotten a very nice risk to reward scenario with our stops being below the previous low. Even though this looks like a very wide stop loss, it would have been better than a one-to-one risk to reward scenario to hit this zone again. Now, what we're going to do now is we're going to analyze what we can expect out of this instrument. This is spot gold, and which means that we are looking at gold against the US dollar. Now, as you can see, we did have this bear trap right here, and for all of you that trade reversals or mean reversals in the market, I'm really sorry about this, but you need to know the fundamentals behind the instrument that you are trading. And trading well and shorting gold was a fool's errand this week. So all of these got bears got trapped, and now they are being cleaned out of the market, and prices is moving up. So the targets, where are the targets right now? The targets that we can look for. Let's have a look and at some Fibonacci extensions, and let's see if we hit some. I haven't looked at them. Right here we have the 40 the 423.6 Fibonacci expansion. Maybe we're hitting right here the 361.8. We never know. So we are going to go ahead and look at the Fibonacci properties. I'm going to get rid of all these little Fibonacci levels that we are not using. And I'm going to use the 368. All right. I'm sorry, 361.8. And as you can see, there it is. So what I'm going to do is I'm going to just change the color to a bright chartreuse. And for you that don't know what chartreuse is a very special liquor or spirit from France. And some people say that it's very herbal. I do find it herbal, and I really don't like it. Uh, I like to drink jaune, which is a, another liquor from France. But let's not talk about liquor here because we are in the end of the commentary. We're just talking about the color chartreuse, and in fact, the liquor is this bright green color. So what we're going to do here, looking at the, we're going to zoom in on the chart, and well, we did break with this down structure that we were well trading in. All right, even though the well, this drop was massive, we were still inside of this kind of I'm sorry, kind of a pitchfork. But I mean, if you want to look at where this market is going to find support, what we're going to do is we're going to wait for gold to hit its targets to the upside. I think it has still room to go to the upside, but we are not going to be chasing this move to the upside. Okay, that would be very highly risky trade, and we don't like to over risk our money. Even though we are risk averse here, we really don't like to over risk our money. Now, what we're going to do is we're going to wait for these levels to be hit, and I can't find a color that is not bright enough for us to well, that is not bright that it hurts my eyes. Well, I'm going to use this one, which I think is fine. Let me just change the color of this Fibonacci retracement to a nice blue. Okay, so here it is. This is the zone that I'm waiting for gold to hit. And as you can see, this is a very, very nice area of supply. We are definitely going to find sellers here. Not only sellers, but also long positions getting rid of covering or getting rid or selling their long positions for a profit. Okay, so what's going to happen? I think what's going to happen, we don't know what's going to happen. And remember, we never said that we know where price is going to go. What we do here is we bet on statistical edges, and we manage our risk correctly. Okay, now what I think this can do, or this price action can do, is go all the way up here, and then I think it can retrace to this zone right here. This is the area that I'm looking for a buy opportunity. So what I'm going to do also is I'm going to move up my alert. All right, when my alert goes off, well, I'm going to be ready for a long opportunity for a break above this area of supply. And it's going to take a lot of buyers to break through this area of supply. As you can see, there's a lot of churn going on around here. Not very um, well, not very clean moves, which means there is a lot of volume. Okay, there's a lot of buyers, there's a lot of sellers, which means that there's no much imbalance between buyers and sellers here, which means that it's going to take a lot of buyers to clean out those sell orders. So what we're going to do here is we're going to wait. This is a waiting game. We are not in a hurry, and of course I don't think that this is going to happen this week. We are going to wait until next week because we really don't want to keep a gold trade over the weekend. So basically, this is our view on gold, and for the time being, we are flat on the GBP yen. So thank you for joining us, guys. And as if you want to get notified when we go live, just subscribe to the YouTube channel. And if you want to trade with us, well, just subscribe to one of our services at snipe the trade.com.